Good morning. Just making one more Nespresso. Shan't be more than 90 seconds. Is this poll not working? Yeah, I installed the app, I don't know, 6 months ago, a year ago, and it didn't work then. I thought maybe they fixed it. Apparently not. Yeah, too bad, huh? Yeah, because what it does is it dynamically changes so you can see people voting. Huh, well, maybe uninstall and reinstall. Yeah, too bad, so sad. BRB. Guten Morgen, yeah, yeah. How are you? My name is Wayne. I will be your guide on this journey we call Forex. Hope you're having a wonderful day. Use this. So, I'm on the community emergency response team, and for my family, I've purchased many fire extinguishers for my home. I recommend you do the same. I haven't even opened one of these yet, so I haven't even seen it. Here's a medium-sized fire extinguisher. You should get one for your house. Okay. You want to look for this label, ABC. Okay. A means that it puts out fires that are based on wood or paper. B means it'll put out fires based on liquids like oil, like you're cooking in the kitchen, or gasoline if there's a fire in your garage. And then C is electronics, so like your computer's on fire. It'll work for all of those, and it's appropriate for the home. The way that you use these, it's called pass. Step one, you pull the pin. There's a little pin there. Looks like it's zip tied on, but there's a little pin there. You pull the pin. That's the P. Then you aim at the base of the fire. So aim down. Don't shoot up at the top of the flame, right? Okay. You spray and you sweep. So that's how you work. And you want to stand, 6, 7, 8 feet away from the fire. So get one for your house. Get a few for your house. I have one for each floor. Safety first, and that comes from preparation. Now I can't see. Get some fire extinguishers for your house. This one even comes with a thing that you can attach it to a wall. So have one fairly close to your kitchen stove. That's where many fires start. Yeah. All right, so let's get going. Today we'll be using TRADARS and Trader's Way. Let's get an update on the headline news. U.S. ADP private sector employment rises 62,000 in April versus 108,000 expected.
U.S. businesses pull back from hiring due to unease about outlook, ADP says.
Bitcoin price forecast. BTC consolidates ahead of MicroStrategy Q1 earnings. Strategic Bitcoin reserve deadline.
United States ADP employment change below forecasts, 108K. In April, actual 62K.
ADP April U.S. employment plus 62K versus plus 115K expected. U.S. dollar faces litmus test with top-tier PCE and GDP data releases. Kickstart the U.S. trading day with a technical look at the Euro-US dollar, U.S. dollar yen, and pound U.S. dollar.
Gold stuck its sessions low on Wednesday ahead of U.S. data.
Germany annual CPI inflation declines to 2.0% in April. Mexico gross domestic product year over year, up to 0.6% in 1Q from previous 0.5%. All right, so a couple of things going on right now that are, impacting the markets. One is ADP was a miss, and Jolts was a miss. So ADP way below 100,000. Okay? Way below. US ADP private sector employment rises 62,000 in April versus 108,000 expected. Yeah. Holy smoke. So this looks like it's coming down pretty steadily. That means the economy is slowing. Less small and medium-sized businesses hired than expected. And less jobs are being advertised. And we have that in the fundamental sector. Next news event. Okay. GDP in 4 minutes and 55 seconds. No scalp, scalp, no scalp, scalp. So if it's less than dollar strength, dollar strength, oh, it's messy. What about if it's greater than dollar strong, dollar strong, dollar strong? Wow, Kiwi's just all over the place. Interesting. So what we're seeing here is the dollar gets strong, but commodity currencies like Kiwi and CAD get stronger. Interesting. But not Aussie. It's a tricky one. So I guess what we could do is just look, your favorite's probably euro dollar. Okay. And so this is our plan. Okay. If the actual is less than, euro dollar up. If the actual is greater than, euro dollar down. So, come on, Wayne. Hey, Wayne, I got a new complaint. Okay, let's drop into a fiber. And you go insert text. And of course it didn't. What? Let's do this again. Copy, 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 copy. Paste will be up. Just little love notes to yourself. Copy, 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 copy. Oh, does it not even add that? It won't even do it? Boo. I don't have to update that. All right. Well, how about this? I think I quickly. All right, there we go. Just little love notes. Keep looking at my watch. My watch is wrong. For some reason, my old vintage Rolex that I've worn for a long time, it's fast. Why would an old watch speed up and not slow down? Mm, it's too bad. Too bad, so sad. So, anyways, so now we can go back to our headline. US ADP private sector employment rises 60. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. How do you access TRADARS? Well, the passcode happens to be the same as your credit card number. Oh, snap! Oh, what? Oh, no. Oh, my gosh. Oh, look at that number. Oh, my God. Negative GDP. Oh, my Lord. Lordy, Lordy. Oh, Lordy. Oh, no. Oh, my God. Wowzer. Yeah, Don, everyone gets gets swing trading. Yeah, I'll show you. The thing is that I haven't quite updated the website fully yet. There's one subscription now, and you'll pretty much get everything. And then you'll have an opportunity to upgrade to join the prop club. So everyone has the same subscription base, and then if you want, you could add the prop fund for an extra $99 a month, and that gets you up to a $300 rebate. So really, people in the prop fund have the possibility. Well, they're gonna get a discount. It could be $50, it could be $100, it could be $200, it could be $300, depending on their trading. So it'll either be cheaper or free, and that's it. So yeah. So you'll get swing trading, and like think of it this way: you'll get the swing trading group, you'll get Quant Box. Remember Quant Box? Okay. Nice, right? Yeah, easy peasy lemon squeeze. All right, so let's just quickly look at some fundamentals and then we're going to do technicals. I've kind of rearranged the way I'm going to do these YouTube live streams just to keep the babble factor low, keep the time constrained. So we'll take a look at some sort of market stuff. We'll do some technical stuff, and we'll maintain a tight routine. So right now we're just looking at what's going on in the markets. It's not okay. This is the futures prices, so they're not live. They're not live, meaning they're not the spot price that trades 24 hours a day. So this is essentially what happened yesterday, and we're about to open the market in an hour. So it's kind of where we stand. So the 10-year T-note fell yesterday in yield, which is good. Oil came down to 60, not unexpected. Gold had a monster day, negative 1.5. Oy vey. Yeah. Dollar strong. Yeah. Partially why gold came down. And Bitcoin, can you imagine Bitcoin had a 0 day? Bitcoin never moves zero. A flat day for Bitcoin is -2 or +2. That's a flat day. So 0? Yeah. We're leaning towards risk on. NASDAQ, FTSE, pound dollar up, euro dollar up, pound Swissy up, USD Swissy down, USD CAD down. Everything else is neutral. So these are the things that you want to focus on. Okay. And looks like we have a global recovery going on in the stock market. Okay. Yep. Which makes sense. Okay. If you recall, bought the dip way down in here. Any hope on USD? I don't even know what that means. Honestly, I don't understand the question. So just very quickly here, risk gauges are bullishly neutral. Okay. Commodities have taken the biggest hit. Money markets are still doing great. We're pulling away from the 8-day average in the hot money. Options market is bullish, but how do you say that? Bullish but neutral. We got to our normal level of capitulation, so it's time for a pause. Biggest winner is Nikkei and S&P 500, Russell, Nasdaq, Dow, DAX. Look, all the stock markets are up. I hope you've been buying. Okay, treasury yields are down. That's awesome. But here's the odd thing. Copper's the biggest loser. Oil's a big loser. Silver's a big loser. What the fudge? So that's interesting. So one of the things I want to show you is we had Jolts yesterday. Jolts is down. And then we just had ADP, and ADP is down. So they're somewhat related, huh? We'll have claims tomorrow. We have NFP on Friday. But that's showing a plausible contraction in the U.S. economy, and now we have a negative GDP. So let's go to technicals. So what I did is my plan now is every day I'll go through this this layup. Every day I'll cover Bitcoin, gold, S&P 500, euro dollar, euro yen, oil. Okay? That's that. So I won't be jumping around to randomness. And then what I did is I plugged that in. Euro yen, euro dollar, Bitcoin. I'll review the stock market with you guys every day. I'll look at Apple, Microsoft, Nvidia, and Tesla. Okay. Seem pretty reasonable. You know what? Let's throw in the 10-year T-note. Okay, good. We'll look at gold and oil. We'll look at the S&P 500. And we'll just do trend and reversal patterns only. Okay? So normally what you would have to do is look at Bitcoin on 5 time frames, gold on 5 time frames, S&P 500 on 5 time frames, euro dollar 5 time frames, euro yen 5 time frames, oil 5 times. So you'd have to look at 30 charts. Let me show you how quickly you can do 30 charts and never make a mistake. You ready? There's Forex, there's crypto, there's stocks, there's commodities, there's indices. There you go. I just did 30 charts. Okay. Now to analyze a little bit more, okay, this is a threat to an uptrend. Okay, this is a sideways moving market that is trying to break to the upside. 10-year T-note, prices are rising, so we have a rising wedge, which means yields should continue to fall. Nvidia is trending sideways, but there's a threat to maybe break up. Well, you know, we have a big earnings this week. Okay, now looking at the same thing, okay, this and that, there's, okay, they're two different patterns depending on your point of view. So you could say, hey, this is a sideways moving trend that might break to the upside. This is suggesting because of the distance of A to B, and really what I call, you know, in my book, what I say is 786 predicts a double bottom. Okay. In this case, a 786 predicts a 121.4, which could lead to a reversal. Well, I'm self-taught, so I had to observe that. Apparently, you could also call that an ABCD. So they're saying it, you know, the pattern shows that could be on the daily, which is not unlike this other one that's happening where you basically consolidate no higher highs, no lower lows, and then suddenly higher high, higher low, higher high, higher low. Okay? So, but that includes Apple and Tesla and look, that's it. 10-year T-note and Nvidia. We're looking at all the other stocks. So there's what, 4 other stocks on 5 different. So we're looking at 20 time frames. You don't see them here. 20 charts looking for reliable, repeatable patterns on those stocks, and they don't exist. So what you don't see is included in your analysis. So basically, like, what about Tesla? Nothing to trade today. Well, what if Tesla goes up? So what? What if Tesla goes down? So what? There's no reliable, repeatable pattern. You want to trade the noise, you do you. You can trade noise for free. Okay? So we're only looking at gold and oil here, and we're only looking for trending patterns and reversal patterns. So oil's come down. Okay? So if 60 holds and it drops down to 59, then that pattern is the same as I just showed you before. 786 predicts a 1382, which then could potentially set up a reversal pattern. Potentially set up. These are emerging patterns. The ABCD hasn't happened yet. You should be aware that it's a threat if you're a bear. Or if you're a bull, it might lead to some sort of opportunity. It might not lead to an ABCD opportunity. But what if we breach back above 60 and then 60 holds as support? Well, that would make a higher high, higher low, and then we would start getting bullish patterns. So this is not really a bullish pattern. It's a threat to a bearish pattern. There is a difference, isn't there? It's not a bullish pattern. It's a threat to bearish patterns. So bulls, be ready. Bears, be aware. What about gold? Descending triangle. This is bearish. Gold shows more likely to break to the downside. So that could be a scalp to you. But if you're not a scalper, then let it break, then catch the pullback, and then short it for longer. That's a 4-hour chart. Oil here, we've had a big drop. As you can see, we tickled 59. We're on our way back to 60. And maybe we get something like this today. And, well, I spent all of yesterday preparing for you to look for something like that. Okay? So you should not be one of those people that say, hey, Wayne talked about buying oil yesterday and oil dropped, so Wayne's wrong. I'm not wrong. If you are a bull and you want to trade seasonality because you believe in the business cycle of oil refineries, then you are looking for bullish opportunities to present themselves. If they do, then you can consider maybe buying a dip. Well, if you notice that this is also a double bottom, how would you feel about that? And at some point, okay, and you have seasonality saying that, well, at some point you got to get on the clue train. They're if-then statements. If this turns bullish and you're already fundamentally bullish because you have logic and rationale, you know that this will last 10 weeks, or you're wrong. Do you need to be wrong for 10 weeks? No. Would you take the shot if you got a reversal pattern at a psych level and you have 10 weeks of seasonality that suggests in the past up was the dominant force? Would you take the shot? Well, that's for you to decide. But again, most people don't know anything's happening, so they're just responding and reacting. Well, that's no way to be a professional. S&P 500, okay? Sideways consolidation with, the potential now for a lower high, lower low. That news was bad. Okay? But 16 minutes ago, this pattern showed that we had support and it breached. I can zoom in if you want, but that it's showing. Because these charts are live. Isn't that ridiculous? I know, right? Look, there's the breach. Whoa. Okay? But it happened right before the news. And then pop. So now you need to decide, what do you want to do next? Well, you want to look left. Okay? And maybe that's your next move. You can also take this green line and project that forward into the future. So if you don't get it today, okay, maybe you get a 3-wave correction later in the week, and then you get your shot. This would be like a scalp, and this might be like tomorrow's day trade on this same reversal zone, just a different time frame. Oh, isn't it lovely? Okay, so we just burned through all of those. Look how easy it is. And the thing is, the machines don't make a mistake. That is a rising wedge on an hourly chart. That is a rising wedge on a 4-hour chart. There's no doubt about it. Next leg is up. Next leg is up. But this was 5 hours ago. Does it know anything about the news that just came out? No. It's a pattern. It's not a prediction. It's a pattern. It's a rising wedge or it's not a rising wedge. Well, what's the definition of a rising wedge? Okay. Higher highs and higher lows. Yes, but that could be a rising channel. Okay. Well, maybe it's, it's higher lows and not quite hot and lower higher highs. Okay. So there's a bit of consolidation inside of bullishness. Cool. Well, we just had news. Guess what? These patterns might collapse. But the cool thing is, if they do collapse, we will see them on our radars. See, you want to see the bombers before they start dropping the bombs. You need a radar. You need to be able to see in the future in front of you. You want to see the bombers coming. And you can say, in the future, they're going to be flying over our city. We need to be prepared. That's why we call these radars. Forex radar, crypto radar, stock radar, commodity radar, indice radar, all doing pattern recognition of things that might be forming. They haven't dropped bombs on our city yet, but they're possibly on the way. You can see these patterns coming. How cool is that? So now we can take a look and get longer points of view. This is something I did a month ago now? A month ago. Our trade plan was around 75. Yes, I drew this before we got to 75. We were way up here. So we looked at 75. Okay, we looked at 75. Okay. A 66 predicts a 1382. So that was, and by predict, the pattern. Okay, I have it going to 121.4. You could argue a little higher, but let's be conservative, right? I think there's also an annual dividend. And so now it's been a whole month, and look at that. So what's the next leg? How about this? What do you think? Smell like a plan? Cool. How about that gold? Gold, baby, gold. Look, I've been talking about it all morning. Look, look, look. Huh? Uh-huh. There you go. Look at the stock market. Oh, no. Okay. Coming up to a deviation. That's not very pretty, though, is it? So let's do this. Insert indicators, custom, price action pivot points. This is my baby. I invented this. Pretty. Okay. Yeah, I'm glad I'm still here. I'm very happy to still be here. Yeah. Where you been? Okay, let's go to our euro dollar. Having looked at many, many, many GDPs with less than expected results, 83.3% of the time, 2 hours after the disappointing news came out, price closed higher. And it kind of looks like it might try, huh? Will it? Oh, I don't know. Okay, past performance does not predict future results, that's for sure. But you can have some fun and say, well, let's mark this up and see what's up. So, okay, are we going to break through any of this stuff? Okay. Now, I don't like I I don't I like channels, but I don't like drawing triangles and wedges. I'm just never really never been one of those. I'm a very horizontal person. Huh? When I grow up, I want to be a hoe. Yeah, I'm a horizontal trader, so I look at support and resistance this way. I don't really like dynamics like this stuff. I'd rather use moving averages. No quarterly outlook today. I got to do some charitable endowment work. I'm preparing for a board meeting that's coming up hot and fast. I'm thinking not tomorrow, but a week from tomorrow during the swing trading class. I might be able to do it tomorrow if I hustle, but the thing is, then I don't really give people enough time to schedule it if they're not usually available, but want to do it live. You see? So that's the conundrum I'm in. So if we have a positive skew here, let's do okay. Maybe it'll turn that way, but whatever. Yeah, I love trading gold. Gold's great. Gold's one of my favorite. It's in particularly good for the morning scalp. Okay, right around 7 a.m. I find the best time of the day for trading gold. Beautiful. So you can connect these wicks, you can connect the real bodies, whatever you prefer, whatever. It's all the same. You're either going to buy a dip or you're not going to buy a dip, right? That's the thing. So, anyways, that's post news. Richard says should go higher. Well, we know statistically 2 hours from now, in the past, it's closed higher, but you should go here. Okay. This is where your decisions are. Good morning, JGB. This is where decisions are made, everybody. Okay. Where you're like down and then up. Okay. That's it. So even if down today, I don't really care. Down today, fine. You're like, well, what if it's a head and shoulders? Yeah, well, then if you're a bear, you should sell it. But buying a dip seems fine to me. Okay. And that just happens to fit like, hey, if in the next 2 hours I get an up opportunity, I can take it. Why? Because the scalp, the news scalp, the event driven strategy allows for it if I'm already a bull. Okay. So, like, let's connect that as a bottom. Okay. And then maybe connect this a little bit as a slope. Okay. And then try to do a parallel slope. Okay. And then our event driven strategy suggests there's a high percentage that this continues this way. Well, that's fine on an hourly chart. If my one daily says up with some down, well, we've had some down. And so it might go up here or it might go up later. Do I know which one? No, but I know what the intent is. And so I have an opportunity that might be presenting itself. Okay? So it's a big, fat, 100% definitely maybe. How about the yen? Well, what's interesting is it looks like it's setting up for a May rally. Okay. Now, if you're a bear, I want you to connect this top with that top and drag it across. Here's what a bear would do. Okay. So which one? This is how you need to be thinking. The answer is probably fundamental. So you need to make a fundamental decision. And whatever your decision is correct. But I want you to be bull or bear. Because if you are a bull, but this bearish plan starts to work out, you should know that you have a high percentage chance of being wrong as a bull. And you should not be buying. You should take a walk. If you're a bear, you're pretty excited because you're in the sell zone. So a lower high at 163 can be your trade. And if you get it right, and this is what technical analysis does, you really have to grab a hold of this. Technical analysis only confirms or denies your trade plan. So bears are going to love a drop off of that. And if that happens, significantly high probability of a downward move to about 157-ish. So if you're a bull, you should be aware that, let's say you bought it now and in a day or two you're up 100 pips, you should be attuned to where the risk is. That's all this is. So if you're a bull, you should understand there's risk to your bullishness at 163. And if there are signs that your bullishness is waning at that price, you should be aware that risk is exponentially increasing. And you should probably lock in your profit or maybe take all your profit. Bears should recognize that if that holds and drops, there's not enough bulls. And bears are going to take over that bullish weakness because we've challenged this price many times before, and bulls have never had the guts to break to the upside. So that's got to be good for bears. Okay? Bulls are looking at it like this way, and they're like, oh, yeah, you know what's going to happen? Up, down, and up. Which one's right? I don't know. But you have the data fundamentally, and you have the data statistically. Like, Wayne, what do you mean statistically? All right, well, let me go back to the fundamentals. So you have to decide if you're a bull or a bear. So hopefully you've already done that. Then we can confirm or deny using statistical analysis. So let's go to, it was Euro Yen. Show you how available all this is. Okay. Statistically, it's more likely to go up than down. Done. Is that what's going to happen? Oh, I didn't say that. It's not doing technical analysis. It's not looking at a pattern like, oh my God, that's a quadruple top. No. But if you're a bull, that might give you confidence. Okay. But this is the quantitative analysis of euro yen. And that should give you some pause. Why are you so bullish? Well, it's not that you can't be bullish, but you should have rhyme or reason for your confidence in something that isn't that amazing right now. But you're like, okay, but Wayne, I'm looking into the future. I'm looking for April to May being bullish. Okay, but what about May, June? Ha 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 ha. Oh, 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 oh. Okay. So we talked about this morning inside of TRADARS when we did the fundamentals. I talked about this move here. I'm already preparing mentally and emotionally, but we're still here. Yeah, well, what's more frightening, riding a roller coaster or riding a roller coaster with your eyes closed? So you can't see the next loop. You can't see the next drop. You're just along for the ride and everything is a surprise. Huh. Lots of people don't see this coming. Will that happen? Oh, we don't know. Okay. We don't know what's going to happen in the future. But how are you supposed to be prepared if you don't know the past? Okay. Okay. So our data shows, whoa, 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 whoa. Somewhere around May. Okay. Somewhere around May, we top out and we drop all the way down. Huh. Okay. And somewhere around the end of somewhere in February, euro yen usually goes up. It goes up February, it goes up March, and then tops out April and then collapses around May. And the gray is what actually happens. So a drop, normal, a rise, normal. Maybe early this year, but this type of stuff is normal. The green are 20-year averages. Okay, so look at this. Down, up, down, oops, up, down. If you don't know that, you're going to get run over by like a freight train. You're not even a match for people that know. It's like taking pips from a baby. You want to be a baby or do you want to be a boss? Well, for that, you need traders.com and trade.